Good morning, good morning, good morning. It's me, Ryan, with the Morning Blast with my dear friend Michael Brown. He should be along any second now. There's Cam. Morning, Cam. Morning, Darren. Morning, Truman. Where's Silly Bollocks? No, he's still not there. I can't even find my legals. Where are they gone? There he is. Invite to co-host. Send co-host invite. Done. Right, let me quickly find legals. There we go. Should know these. Oh, good morning. Try not to
Apologies
have
for
a...
the
Oh, go
apologies
on.
for the delay. I've spent the last 4 days trying to set up a new laptop, and it's gone about as well as you could imagine it would go.
Oh, all right, Grandad.
Well,
Let me get...
I might finally have cracked it just now.
Oh, God. Right, legals. Nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Trading as PIQ or PIQ Suite, or its affiliates, including the hosts, which is, of course, myself, Ryan Paisley, and the awesome Mr. Michael Brown. Apologies if I'm a little bit croaky. I had a bit of a long weekend. It was our dear friend Shian's wedding, of New Squawk fame, and yeah, now I'm in Lisbon.
I was
So
going
had
to
a
say
couple
you're on your travels this week, aren't you? It's like
outside broadcast.
Stuart Little's been let loose.
Ah, well played. Right, on that note, crack on.
Well,
Because I
yes,
don't know,
let's crack on.
because I have no idea what's happened over the weekend.
Well, I've got half an idea, but given the precarious state of my computer, that this could all go terribly wrong at any moment. So, forewarned is forearmed, as they
Oh
say.
God.
In any case, let's try and crack on.
Yeah.
Good morning, everybody. It was a relatively quiet day on Friday, I suppose, which was really no surprise. I think everyone was just completely and utterly shattered after the fortnight of event risk that we'd had. It was given the lack of external catalysts, markets did not really do particularly much. We saw a very slow but steady grind higher in the equity space, with the S&P 500 ending Friday around 0.4% higher, which saw the benchmark index round out a weekly gain of just under 5%, which is the best 1 week performance for the S&P 500 in around 12 months. And that, of course, comes as markets buy into the equity space amid optimism around the red wave that we saw as a result of the election last week. And even Ryan knows the election result by now,
Yes.
which obviously you didn't on Wednesday morning. In terms of markets elsewhere, the dollar was broadly firmer, the dollar index trading around 0.5% higher, north of the 105 mark, and we trade north of that 105 figure this morning, having built on those gains somewhat. G10s were relatively contained outside of the Aussie and the Kiwi dollars, both of which traded around 1% softer. And of course, that was after the China NPC meeting, again disappointed compared to the market's expectations for greater fiscal stimulus. The market, of course, had been looking for something in addition to this local government swap plan that we already knew about, and it didn't get it. The common wisdom is that the Chinese authorities are somewhat keeping their fiscal powder dry in case they need to do more to insulate the economy once Trump is in the White House and has been inaugurated in late January. In terms of the Treasury complex, it was a little bit of a mixed day. We saw some selling at the front end of the curve, the two-year yield rising 6 basis points on the day, some modest demand at the long end with the curve flattening and the 2s10s coming down to less than 5 basis points. And we also saw a little bit of downside in the commodity space. Gold down by just under 1% and crude WTI down around 3%. Its worst day since late October. In terms of other bits and bobs from Friday, as I said, catalysts were somewhat lacking. We had a mixed labour market report out of Canada. The economy adding a net 14,500 jobs in October, around half of that which had been expected. But unemployment, that held steady at 6.5%, beating expectations for a rise to 6.6%. We also had the preliminary read on consumer sentiment from the University of Michigan, that index rising to 73 in November from a prior 70 spot 5. I don't know if that incorporates the election result because, to be completely honest, I haven't bothered to go and find out. But I'm sure someone more intelligent than me will have done. Speaking of politics, just a couple of headlines from over the weekend and late Friday, actually. The first is that Biden and Trump are going to meet in the Oval Office on Wednesday. I guess, that's if Biden remembers that he's meant to be turning up. Although, as I said, as I said last week, he does appear to be sort of slightly less
Well,
senile
you
at
say
this
that. I
point
did
now
see a
that the
picture of him on the beach.
election's over.
I did see a video of him on the beach this morning, and he was stumbling all over the show. It wasn't a great look,
Oh dear!
unfortunately.
Like you coming out of the American bar after the
Yeah,
election.
pretty much. Not gonna lie.
Yeah, well, exactly. The other story is Trump is starting to make some of the key appointments to his administration. We had the announcement of the chief of staff towards the back end of last week, a lady called Susie Wiles. She effectively ran the Trump campaign. He has also, according to the FT, asked Robert Lighthizer to come back as US trade representative. Of course, Lighthizer ran the Trade Department in the first Trump administration and is known for his pretty hawkish views on trade. We've also heard about who won't be in the administration. Firstly, Nikki Haley. She is not getting a job, according to Trump's posts on the internet over the weekend, nor will Mike Pompeo and my lookalike, Steve Mnuchin. He has apparently ruled himself out of the running as well. But I do think that, of course, those appointments will continue over the next kind of week or so, and markets will just be keen. Obviously, we know that the trade representative, but also just who is going to get that Treasury Secretary job, I think is going to be interesting for participants as well.
Well, that is a great segue to my top line, which is exactly on this subject, because Elon Musk has said he would prefer not to hold a formal position in the Trump administration, focusing on his business projects instead. He apparently believes he has enough influence already without having to have it like formally titled. I guess this also gives.
I mean, you're the world's richest man. You don't really need a bloody business card, do you, to
Well,
be
yeah,
honest?
exactly that, and also it does mean he can just walk away as soon as things start going tits up. So probably a good move. Sticking with Trump, it's also been quoted that he's fully willing to implement the tariffs, and he is fully willing to cut a trade deal if he thinks that a deal is better for interests of the United States. This is from Cleet Willems, who served as a top White House international economics aide in Trump's first term. Trump advisors are preparing plans to carry out mass deportation pledge and could make an emergency declaration to utilize military assets to complete the job. So obviously this is all leading towards perhaps he might be coming true on a lot of his promises made during the run-up to the election, which a lot of people were doubtful of. Just a couple more bits from me. Chinese stocks, industrial metals, and the yuan saw further depreciation today, this morning in the Asian session, after soft data, CPI data, and further fallout from Friday's MPC announcement. If we remember, that's where we'd had no bazooka, and it was more of a, you know, kind of cash.
Water pistol,
Yeah,
almost, wasn't
well,
it?
not even that really, was it? It was like cashing your bad debt. It was like a bad debt amnesty, basically. And obviously, not to mention the Trump impending administration, putting a bit of a dampener on all things China. And finally, for me, keeping it nice and short, German Chancellor Scholz said yesterday that he wouldn't have a problem with a vote of confidence before Christmas. This obviously provides potentially faster route to ending political uncertainty amid the budget impasse. Obviously, until today or until that, the plan was that they were going to have a vote of confidence in January. I believe it was the 14th or 15th, Michael. One of those two.
Something like that,
Yeah,
yes.
and then if he lost that, which he will, they were going to have an election in March. So things are starting to move faster in Germany, which, to be fair, probably is needed because if Trump starts making all these announcements about what he's going to do when he's in power, Germany really should have their ass. They should really be like get their asses in gear and so they can prepare and counter and just not be there left flailing. And there you go.
Yes.
Back to you.
Good stuff. Thank you, mate. Well, in terms of the day ahead on the economic calendar, at least, it is a very quiet one. There are no data, earnings, or central bank speakers of note. Although it is, of course, worth remembering that today is Remembrance Day here in the UK
Indeed.
and Veterans Day in the United States. So I would strongly urge you to take a couple of minutes out of your day just to pause and think about those who did and have given the sacrifice for well, us really to be sat here on this call and enjoying
Very well
the
said.
lives that we live today. And that, of course, will be a 2 minute silence at 11 o'clock here in the UK. Moving on to the remainder of the week, the docket is actually relatively quiet looking to the next 4 days or so, although I suppose relative to what we've had over the last couple of weeks, anything would seem relatively quiet. Just to run through a couple of the main events over the remainder of the trading week. Tomorrow, we have the latest employment figures out of the United Kingdom. Unemployment, that's expected to rise to 4.1% from a prior 4%. Earnings, they're seen pretty much unchanged, hovering around the 4% mark in terms of overall pay. And excluding bonus, we're looking at earnings at around 5%. Just take all of that with a pinch of salt, really, because the ONS themselves admit that the labour force survey is not really fit for purpose, and that all other indicators of the UK labour market are pretty much pointing to the polar opposite of the official ONS data. So do just bear that in mind. We also get tomorrow the latest ZEW sentiment surveys from Germany as well. And of course, just some context around that, as Ryan was just alluding to, we could potentially see a little bit of downside in business and confidence as a result of the political uncertainty. Moving into Wednesday, I guess one of the main events of the week will be the latest CPI figures from the United States. Headline CPI, that's seen rising by 2.6% on an annual basis in October. That will primarily be a result of higher energy prices, although I'm sure that Dickie Matthews will be out calling for a rate hike within
Yeah.
seconds of that data dropping. Core inflation, that is seen holding steady at 3.3%. Without wishing to sort of resort to cliches, CPI isn't what it once was. The Fed have pretty much told us that they're confident in inflation going back to 2%, and I don't think that the inflation print on Tuesday is going to materially shift out. Speaking of the Fed, we hear from Fed Chair Powell on Thursday evening. He is due to make remarks, and Bank of England Governor Andrew Bailey due to speak on Thursday as well. Given that both of those speeches will come just a week after the respective governors held post-decision press conferences, I don't think we're likely to see too much by way of fresh information or any particularly impactful comments from either of them. Thursday is probably the busiest day of the week, though, in terms of economic data. We get GDP and industrial production from the Eurozone, and we get PPI and jobless claims from the United States. Plus, for the purists out there, we get minutes from the October ECB meeting. So if anyone's struggling to sleep, then print those off and have a read. And moving into Friday, we get a bit of a data dump out of China, industrial production and retail sales. Both of those are made up, let's be honest, so don't read too much into those. We also get the first estimate of Q3 GDP here in the UK. Bear in mind that both business and consumer confidence, well, without putting too fine a point on it, fell off a cliff in the third quarter as markets became quite, as businesses and consumers became quite jittery ahead of the budget. So expect that to feed through into a pretty soft GDP print. Of course, the weather was pretty grim over that period as well, and that may have further depressed spending. Consensus sees GDP rising 0.2% on the quarter from a prior 0.5%. And last but by no means least, Friday also brings the latest US retail sales numbers. Sales seem rising by 0.3% on the month in October compared to the 0.4% rise that we saw in September. So a little bit of a quieter week in terms of data. CPI and retail sales, probably the big ones to keep an eye on. Also, just bear in mind the geopolitical situation and the political situation as Trump continues to form his cabinet and formulate his agenda for the first 100
And
days.
also, just to add as well, obviously, one thing we have mentioned a couple of times on the show recently is the potential that we could see lots of market participants leaving the markets for the rest of the year. And so this will be the week where we kind of, where the
Yes,
kind of
indeed.
week if we we do see that materialise. Obviously, today's a bit of an odd one anyway because it is Veterans Day, which is a federal holiday. So we might see reduced liquidity over there regardless. So yeah, but one to keep an eye on this week.
Yeah, just on that, Veterans Day is a federal holiday, as you said. Trade in the cash treasury market is
Yep.
closed all day, but I believe everything else
Yeah.
is pretty much
Yeah,
trading as normal.
that's always the way, isn't it? With the federal holidays, it's pretty
Yeah,
much just the bond markets, the cash bond markets that suffer. But cool, right?
I've always said bond traders are the most intelligent out there.
Well, absolutely, absolutely. Yeah, can't argue there. Right, brilliant. Everyone, if you are trading today, like we said, as always, keep it tight. Don't do your arse, basically. And we will see you all tomorrow.
We will indeed. Thanks,
See
guys.
ya. Bye. Do 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 do
Bye.
do 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 do. Oh, you're right.
Just dying.